Today, we're digging into Alphabet's latest earnings report, and it is a blockbuster. But we're not just going to look at the numbers. We are hunting for the story behind those numbers. And that story, you'll see, is all about one thing: artificial intelligence. Okay, let's get into it.
So let's start with the headline number, which is almost hard to wrap your head around: $96.4 billion. That's Alphabet's revenue for just 3 months, just one quarter. It's a figure so huge, it really sets the stage for everything else we're about to talk about. So, how on earth did they get here?
Well, we don't have to guess. CEO Sundar Pichai says it right here. The engine behind all this growth, the thing that's hitting every single part of their business, it's AI. This tells you right away this isn't some side project. It's the absolute core of their entire strategy now.
All right, so for our first section, let's just take a moment to appreciate how successful this quarter really was. Before we get into the nuts and bolts of the AI strategy, it's worth seeing the sheer scale of this financial performance.
And you know, it's not just about that massive revenue number. Look at this. Operating income, that's the actual profit they make from their work, is up 14% to over $31 billion, and net income, the pure profit at the end of the day, jumped 19%. This means the company isn't just getting bigger, it's actually getting more profitable, which tells you something is working really, really well.
And that brings us to section 2, which is really the heart of this whole explainer. This success is not an accident. It's the result of a very specific, multi-layered plan they call their full-stack AI strategy. So let's break down what that actually means. And again, Pichai frames it perfectly. He's not talking about something they just decided to do. He's talking about long-term investments in a complete end-to-end system. It really shows how a vision from years ago is now paying off in a huge, huge way.
Okay, so here's the full stack, broken down into 3 pretty simple layers. It all starts with the foundation, the infrastructure. Think of this as the physical stuff: global data centers and their own custom-built computer chips called TPUs that are made specifically for AI. Then you have the models, which are like the brains of the operation. You've probably heard of the Gemini family. And finally, you get the products. This is the part we all see and touch, where that AI gets delivered to billions of people through things like search, YouTube, and the cloud. See how each layer builds right on top of the last one? And to make this really concrete, check out these real-world examples from each layer. Their infrastructure is so good that apparently nearly every major generative AI startup, the unicorns, uses their cloud. Their model, Gemini 2.5, is acing all the major industry tests. And on the product side, AI overviews in search has just exploded, with over 2 billion people using it every month. This isn't theoretical stuff. It's happening at a massive scale right now. Which leads us right into section 3. We've seen the strategy, but is it actually working? So now, let's look at the proof. How is this AI stack actually changing the Google products we use every day and, more importantly, delivering real results? The growth in just plain usage is staggering. I mean, look at this. The amount of data their AI is processing every month has more than doubled since May to almost 1 quadrillion tokens. That's 1,000 trillion. It's a mind-boggling number. The Gemini app has over 450 million active users, and VO3, their new video model, it's been used to make over 70 million videos in just a couple of months. The adoption rate is just incredible. So here's the crucial part. How does this all translate into business results? Well, in search, when those AI overviews show up, people are actually searching more than 10% more. On YouTube, AI-powered recommendations are helping shorts hit an insane 200 billion daily views. And for cloud, the demand is so high they signed as many billion-dollar deals in the first 6 months of this year as they did in all of last year combined.
This brings us perfectly to section 4. Let's follow the money. We've connected the AI strategy to product success. Now let's see how that all shakes out in the financials, where the money is coming from, and, just as important, where it's going. First, a real quick definition you're going to hear: annual revenue run rate. It's just a simple way to project what a full year's revenue would be if the current quarter's performance continued. It's basically a snapshot of a company's momentum. And it's a big deal right now because Google Cloud just passed a massive milestone, a $50 billion run rate. So where did that $96 billion actually come from? Well, no surprise, search is still the king of the castle, making up over half of all the revenue. But look at the other pieces. Cloud is now a significant 14%, and it's growing like a weed. Subscriptions and YouTube ads are also major players. It's pretty clear that while search still dominates, Alphabet is becoming a much more diversified company.
But honestly, this table right here, this might tell the most important financial story of the whole quarter. Sure, Google Services, that's search and YouTube, is the massive profit engine. But look at Google Cloud. Its operating income more than doubled in just 1 year, from $1.2 to $2.8 billion. This shows that cloud isn't just a revenue story anymore. It is becoming a serious profit driver all on its own.
Now, for where the money is going. To get that, we need to know the term capital expenditure, or CapEx for short. It's basically the money they spend on big physical things, like those data centers and servers that power the entire AI stack we talked about. And here is the number. Alphabet now plans to spend $85 billion on CapEx this year alone. That is a $10 billion increase from what they were forecasting just a few months ago. It's an absolutely huge bet on the future.
So that begs the obvious question, right? Why on earth spend that much money? Well, the answer is pretty simple. Demand. The company says demand for their AI and cloud services is just so strong that they are literally racing to build data centers and buy servers just to keep up. They're investing like crazy because they see a massive opportunity for growth right in front of them. So what does all this mean for the future? Well, in our final section, let's look at the road ahead, because the earnings call gave us some really fascinating hints about both the huge opportunities and the tough challenges that Alphabet is facing. On one hand, the opportunity is immense. They're talking about something called agentic search, an AI that doesn't just give you links, but actually completes complex, multi-step tasks for you. But on the other hand, you've got real challenges. All that huge demand is creating what they call a tight compute supply, which means they actually can't build their infrastructure fast enough to meet it. And of course, the competition in AI is fiercer than it has ever been. But Sundar Pichai gives us a timeline for that next big leap. He actually expects that by 2026, that's just about a year and a half from now, these agentic experiences will start to become mainstream. It's a really bold prediction, and it gives us a clear sense of just how fast they believe this technology is moving. Which leaves us with one final thought. We've talked about corporate strategy, trillions of tokens, and billions of dollars. But in the end, this technology is coming for all of us. So as AI gets powerful enough to become a true personal agent, the question is, what's the one thing you would want it to do for you? That's what we'll be watching for next.